of the Crypto Hour. Today is the 1st of November. So this weekend, probably you're going to have all kind of sort of Halloween things, people knocking on your door asking for trick or treat. It's not an Italian tradition, generally, so, but I know that, you guys from the US are quite big on this. And some people here in the UK, even in our neighborhood, are going absolutely bananas, decking their house in kind of Halloween, building boats in the front garden, pirate boats and stuff like that. So anyway, for those of you that take part in Halloween, then have a good trick or treat. And for anybody else, now we'll talk about crypto. So let me share something with you, because it's been like an important week from the point of view of Bitcoin. Let me see. Sorry. Okay, let's go first and have a quick look at the price of Bitcoin first. Okay, so we were discussing last week that we needed to see a close above this point here, this red circle, to confirm we are actually we have broken now the downtrend that we've been in since March, and we now resume the uptrend. As I told you before, these points were not relevant as they've all been tested before. We just pretty much paused, and there is a correction now at the real all-time high. So we pretty much went back to the all-time high bar about $100, and now there is a correction going back down from 73.5, I don't want to 69. But as you can see, this is looking healthy now with a close about this, and so what can we expect? We can expect to have this now will be the kind of like the target if you want to probably re-enter Bitcoin, and if we follow this pattern, then we should have a bounce in this area, and then I think that the next time we're going to get to the all-time high, now we would have spent a lot of the supply there was up here. So we should now go through it. It would probably be so close to the US election. This would probably happen after the elections, if it happens, or there might be a strong correction. Who knows? Nobody has a crystal ball here. But it is, the only thing we can do is comment on what we see. And we've been, since March, we've been going sideways on Bitcoin. But as before, it was sideways with a downward momentum, up to the beginning of August. We have then started retracing our steps to the high of March. Now let's see what has fueled this to this point, and let's have a look at the ETFs. As you can see, this past week, Monday, Tuesday, Wednesday, Thursday, there's quite a lot of money coming to Bitcoin, okay, from ETFs. So we're talking about more than $2 billion coming in just this week. Obviously, yesterday there was an outflow from a lot of funds, as you can see, but it's still a positive inflow in total. But it slowed down. Bitcoin price, took a dip. But if we see here, the bottom line is we now are 24 billion. And we've been hanging around at about 17, 18 billion for a long time. And in this past couple of weeks, see here, this new influx of money that's finding its way to Bitcoin is taking it basically from 62,000 to where we are now, to pretty much trade at around 72, 73,000. Although now we come down slightly. You can see how the negative pressure here at the bottom, the red that we saw from June all the way to to the end of September, is now being replaced by by green mostly. But the thing I wanted to discuss with you is, in particular, we'll have a look very quickly about Ethereum as well, the Ethereum ETFs. So generally speaking, there's been a positive inflow in Ethereum as well this week, but not obviously as much as in Bitcoin. So we're talking about what, 7, 11, 20, around 23, 24 million. So it's not a big sum. We're still standing at 468 million negative amount since the inception of the Ethereum ETF. But let's go and talk about Bitcoin, because what I want to discuss with you, first of all, are there other ways of playing on what Bitcoin means as a monetary phenomenon, and how does this compare to what we found in stocks and shares? Because we've had quite a run. When you look at the Nasdaq and when we look at the S&P, we've had quite a run. Get away from this. Let me just make this a little bit bigger. Okay, so as you can see now, we've had a 29% in the Nasdaq, 28% in the S&P, and 13% in the Russell. So these are kind of like big numbers for equities, and we're just comparing it in this table, just comparing to 2019, because it's the last time that we came out of a recession with what is considered like a soft landing. So we're trying to see the differences between one and the other, but I just wanted to show you. So these are the numbers that we see in the Nasdaq and the S&P. So the major ones. So see, I'm talking about 28 to 30%, in the Nasdaq and S&P. So what does this mean? First of all, the being the US dollar being the major currency for world trade, what has happened is that and being kind of an inflationary currency like all the fiat currency in this world, what has happened is that the US dollar has been monetized, so that a lot of people that have more than they need to, so they need to save. They don't want to save in US dollars because this is losing value over time, so they need to place their money somewhere. So in this way, people have bought the stock market, so the growth, and they have this strategy that they keep buying it at any price. Now, if we look at the average price earning ratio, I've just made a note of it here. Just checked it this morning. The average price earning ratio for the Nasdaq, which includes kind of the fastest growing technology company, is a 43.3 on average. So there are companies that have a P/E ratio of 100, over 50, which is like insane. So what does that mean? When you say a P/E ratio, seems like a mathematical term, that it doesn't really mean much to a lot of us. But if we put it in simple words, a P/E ratio is how much do you pay for each dollar of earning that a company makes. Because when you invest in something, is on expectation that that company will, make a profit. Okay, so the earnings then will be either shared, so this is what they pay the dividends out, or it will cause, if companies don't, distribute a lot of, their dividends, it will cause their share price to grow. Now, so that means that for each dollar of earning, when you say a P ratio of 43, means it costs you $43 to buy $1 of earnings per year. So on average, so this is not for the best companies that got even much higher P ratios, but on average, it would take you 43 years to get your money back. And this is what people are buying all the time. Now, there's something that I wanted to show you, which might or may not blow your mind, but is all of you might have heard about MicroStrategy, okay, which is the biggest corporate holders of Bitcoin, and they have just announced the biggest offering in the history of capital markets. So they're going to raise $42 billion 22 billion in equity, sorry, 21 billion in equity and 21 billion in fixed income. That is going to happen over the next 3 years. Now, compare this to normal companies that normally, when they have high earnings, what do? They buy back their shares generally. So they return capital to the investors so that their balance sheet looks healthier. Okay. And MicroStrategy instead is doing the opposite. Is issuing new shares. And what they're doing with these shares, they're just buying Bitcoin. Now, obviously, that's been a strategy for them for many years. And you can see this strategy has paid quite well since Bitcoin started turning around. Okay. So by the way, if you had a look at MicroStrategy in the past few years, you might have seen that the prices were a lot higher. They did a 10-to-1 stock split, and the price has gone back pretty much to what it was before the 10-to-1 stock split. Okay, so this is if you kind of baffled, I think where is I knew MicroStrategy more than $1,000. Where is it? Okay, that's the reason why. But this is all being rebased in the new pricing, because I said their price to make it more affordable for investors has been reduced, because now would be otherwise $2,500 per share. So if you look here in to the end of 2023, okay, just here, it was like $44 and is now $244. Okay, so it's grown like six times in just about 1 year, in 2024. Now, if you would say, what would you expect? Would you expect the price earning ratio to be on MicroStrategy? Would you think it would be in line with the Nasdaq, for example, where other technology companies are? Do you think it would be higher? Do you think it would be lower? Anybody would want to guess? No guesses?
Lower?
Yeah, just give me a number. So the average in the Nasdaq is 43. What do you think this would be?
$20.
Okay, we got 20. Anybody else wants to guess? You can put it in the chat if you don't want to speak, or just unmute yourself and speak. Okay, if you're not guessing people, I mean, the MicroStrategy price earning ratio is at the moment is 22. Okay, 22, which is about half of what the one of the Nasdaq. Even if they've grown like crazy this year, while the Nasdaq is grown, about 30%, MicroStrategy has grown about 500%. Okay, but any similar to the growth that we've seen in Bitcoin, because Bitcoin again came from what was it? What was Bitcoin around the 16,000 to current levels, so it's grown 4.5 times as well. So it has grown so much, but what you need to understand is that, this is where the technicality matter. Okay. So if you look the accounting standard that MicroStrategy is using, they're just valuing Bitcoin at the average purchase price. And this is how it is in the balance sheet. Now, what's happening in January? They are changing the accounting methods. So they will then mark Bitcoin to market. I said it's what it's called, that mark to market. So when they issue they have the earnings reports, they will be marked at current price. So if you see a MicroStrategy now, I don't know what the current valuation of their average purchases are, but it is about, I think, about around the $39,000-$40,000 per Bitcoin. So you can see that from where the price is now, they would almost like double the value of the Bitcoin. They go like hundreds of billions worth of Bitcoin in the balance sheet. So you can imagine what effect that would be. That will bring the price earning ratio for the current level of 22 to about 5 or 6. Okay, so why is that important? Because now first of all, we have a PE ratio for a company that's doing really well and now will be seen as a very rapid growth because all of a sudden they're going to have massive earnings, because of their accounting standard have changed. So everybody would take notice. So what would that cause? Is either a kind of repricing of MicroStrategy to take effect with the new earnings, or it could be a repricing of the rest of the stock market. So either one goes down in like pretty much like doubles in price, or there is a considerable repricing of other stocks, because what will you think will matter to people now is that Bitcoin is becoming pretty much the benchmark, because people have companies have got the option to do what MicroStrategy have done with the cash they're holding in their treasuries. Now they're talking about in December there's going to be a vote from Microsoft shareholders to decide if they should hold Bitcoin in their treasury. Again, Microsoft's a company that makes tens of billions per year of profits. So that is relevant. Is a part of that is held in Bitcoin. Then again, it would be another corporate entity that will invest largely in Bitcoin. But the idea is this. So if you think of it from the point of view of you and me and any investor that buys stocks in the stock market, you have one company, and there are some other companies as well that are invested in Bitcoin. But with MicroStrategy, it's pretty much like everything they can raise, everything they earn is turned into Bitcoin. So if you have a company that is having X earnings just by having Bitcoin, for you to be meaningful in investing in something else, that company must earn more than Bitcoin. Otherwise, why would you put money in that company? So, and the difference is, at the moment, we're talking about, we're just talking about here, the CoinGlass, okay, and we're looking at, we're discussing the flows and how much money has come in. So we're talking about 24 billion has come into the ETFs since they were launched, okay. Yeah. So which is in January of this year. Now, do you know how much money is in the share market? You got any ideas? Okay, I'll give you a tip. It's a lot more than this, and it is about $11 trillion. Okay, so it's as soon as the idea is that soon this will begin to drop. The actual this little idea in people's minds will become to drop on thinking, instead of just a company is doing well or not well because the dollars are going up, but then if the dollar is going down, you got to discount that, and it's a difficult calculation to make, and everybody's very confused, and they just look at the bottom figure, saying, well, the company is doing well because they paid their costs and they made some money, but then was that money worth, And once we can compare it with this, it will become a de facto benchmark for everything else. So this is, I think, the process now. We are just at the very, very, very first few steps of this process, and where we are introducing a new monetary system, which will take the place eventually of the monetary system that we have had for the past 4,000 or 5,000 years, which was based on precious metals and gold. So this is just the beginning of this process. Now, if you think about it, at the moment, Bitcoin is worth over $1 trillion, okay, $1.3 trillion. And what we were discussing last week, and maybe we'll see if Jonathan, are you okay to do a 5 minutes on the Bitcoin and Cardano collaboration, let's put it that way, or connection, because not only now, so this is just the beginning of the money flowing into Bitcoin as almost like the gateway into crypto. Okay, up to now, all you could do with Bitcoin, you could buy, keep it, and that's it. Okay, so your hold is pretty much like equivalent, the digital equivalent of putting your money under the mattress. It's been a very profitable mattress if you have to accumulate Bitcoin from the beginning. But now, with the announcement from last week from the Bitcoin operating system at the Cardano Summit, now we're going to have a way of connecting all this liquidity. Remember, the moment is 1.3 trillion, but I can imagine, just by the end of this cycle, we're probably going to be like about at least 3 times as much. So all this liquidity now has a way of being used, being in smart contracts in a programmable way that Cardano can offer. And Jonathan, I'll leave it up to you for 5 minutes to discuss how can this happen, and differently from what is already happening in other chains, can it happen completely seamlessly, and also where things happen can be seamlessly happen on other Cardano and Bitcoin.
Yeah, it's fascinating development that I wasn't expecting. We'd seen hints of it so far within developers' projects that it's possible to effectively replicate any transaction, any smart contract engagement in Cardano. You'll effectively be able to do the same thing with Bitcoin. And the sort of breakthrough has been bringing zero knowledge proofs into Bitcoin, which means that you can carry out a transaction on the Bitcoin network in a way that is verifiable and trustworthy, same as any other transaction on Bitcoin. And this gives it a utility that's greater than it's had before, and it's not happening on another chain, a side chain. It's not a wrapped transaction. It's actually native to Bitcoin. And as we've seen for the last sort of year or so, Cardano has been leveraging its ability to carry out transactions. Code that's written to carry out transactions on Cardano can actually be brought over to carry out very similar transactions on Bitcoin. So we've had the rise of ordinals on Bitcoin, which has been like the NFT versions of images, and eventually will be assets can be created fractionalized on Bitcoin, and the sort of the ability to lend and borrow those NFTs has been built into a platform called Fluid Tokens. Funnily enough, not me, not Fluid7, but Fluid Tokens, another project on Cardano, and that allows NFT borrowing, lending, so on and so forth. So you can actually put up assets as collateral. You can then take out a loan, just like you would for taking out a mortgage on a house. Imagine this, but for digital assets or digital representations of assets. You can now do that. Take that code that's been written for Cardano and replicate it, and have a Bitcoin alternative platform. And now this, as far as I understand it, I'm not, into the very, very hardcore part of the blockchain architecture. As far as I can, you can now run a zero knowledge proof that will let you carry out the same transactions from Cardano actually on the Bitcoin blockchain itself. So whereas before you would have to have a bridge if you wanted to bring Bitcoin over to another chain, you can now actually just leave the Bitcoin where it is, carry out the transaction on Cardano, and that is now provably transacted on both Cardano and on Bitcoin. And without the Bitcoin having left your wallet. So if you want to send Bitcoin to somebody else, then you could do it through a Cardano transaction. And this will, on the basic circumstance, will allow you to actually pay your transaction fees in ADA. So if you are very keen on hanging on to your precious Bitcoin because you're a Bitcoin maxi, this is perfect for you because then you don't even have to give up some of your Bitcoin to carry out a transaction. You can actually just spend some ADA. And also now we can actually carry out transactions that are more complicated than just wallet to wallet. You can actually engage with smart contracts. So you can choose, if you trust the Cardano network, you can choose to wrap your or send your Bitcoin into a smart contract that will carry out its processes on Cardano. And then when you extract it out of the smart contract, it'll come back to your Bitcoin wallet. And this is the same level of risk as you would have engaging in Cardano DeFi as you would with Bitcoin. So it's not a bridge. You're not sort of minting and burning assets or locking them up in contracts on the Bitcoin network and having a side chain or a layer 2 solution that's rolling them up and extracting them out. This is all staying in your on your native Bitcoin blockchain, carrying out native Bitcoin processes, but actually having all the power of smart contracts from Cardano. So DEXs, lending platforms will all just flow. The code that's already existing, been operating for the last 2 years, 3 years on Cardano, can now be looked to be leveraged and brought into a Bitcoin layer. And the Bitcoin OS guys are the guys who broke the sort of Bitcoin end of the challenge. And there's a whole load of developers who've been building for Cardano that can now pick up and merge their system together. It's fascinating, really exciting.
It's incredible because it's kind of like what's incredible as well, because obviously Bitcoin is, as you said, there's lots of Bitcoin maxi. They are very wary of using the Bitcoin anywhere else. Now, they don't even, with this development, they can interact with Cardano without even having to have a Cardano wallet. They can do it, directly from Bitcoin. And also, people are asking, why should we use the Bitcoiners? Why should we use our Cardano if we go, Bitcoin on our wallet and everything? Well, the thing is that, first of all, transactions are going to be even more secure than the Bitcoin Lightning Network, because the security on Cardano is much higher. But also, as I said, it's going to allow them to get yield on their Bitcoin, and people have amassed fortunes. Early buyers of Bitcoins. I've got fortune, or institutional buyers of Bitcoins as well. I've got lots and lots of capital just sitting there, which now could produce a yield. And you can use it for simple things they use in DeFi, just to look at the easiest thing without going complicated, but just lending and borrowing. So we can lend the Bitcoin or use it as a collateral. Many people are used already platforms to get a loan out of the crypto holdings instead of selling it, because then the loans are not taxable and they can start spending the money that they made on crypto without having to pay taxes on it. And there are all these ways now that this can be done very, very easily with the safety of your Bitcoin wallet on one side, and all the smart contracts that are pretty much what we can say they're superior to the ones that have been developed on Ethereum on Cardano. That gives them security for the kind of a smart contract side of it. And it's it's going to be massive. Not just, obviously we're talking about Cardano here. We know that we are Cardano friendly in this session, but also from the point of view of Bitcoin and starting to use this, because of just we've gone from just proof of concept when Bitcoin was launched, and now Bitcoin becoming an institutional level asset to, as we can see now, probably becoming the benchmark soon for a lot of other investments, because as the barriers to entry of this are being reduced and eliminated, now it's logical to start asking, okay, we got the option of buying shares or buying Bitcoin or Ethereum. If the shares don't do as well as Bitcoin, why should we bother? Because we have something that is safe, doesn't deteriorate over time, and it's not down to this. The results are just down to adoption rather than human decisions that can go well or badly for a individual company. And it would reprice everything, because we're talking about literally okay, how are we doing in Bitcoin terms? Are we doing well or are we doing badly in Bitcoin terms? If we're not, it would be something that companies will have to prove that what they do is better than the alternative. And now we are establishing an alternative that is solid and has got similar rules to the ones that that you have to follow for having stocks and shares on the market. And it's a very compelling reason, very compelling situation. So it's really exciting time for the whole crypto market because Bitcoin holds the majority of the liquidity for the whole of crypto. So what's on Bitcoin is worth more than all the rest of crypto put together. Bitcoin dominance at the moment is around 60%. That means that 60% of the crypto market is Bitcoin, 40% is everything else. So if that 60% can then be used rather than just kept sitting there, it means it will increase the velocity of the crypto money. So as it goes into circulation and gets used a number of times instead of just sitting in the same account, that will generate more fees. It will generate more economic activity. And in general, obviously, where is that economic activity going? So generally speaking, if it's already crossed from fiat to crypto, it will tend to stay in crypto. So that's the big thing that we need to see a little bit beyond what is just what's the price of Bitcoin going to be, or what's the price of Cardano or anything else. We look to see beyond that and thinking, what does that mean generally for the industry? Because this is like a very rapidly growing industry. It's still got relatively few applications so far in a normal society, but that's changing very, very quickly. It's just talking about Cardano, alone. There's one of the biggest projects on Cardano is the World Mobile Token, for example, that is promoting like a decentralized way of making internet access accessible to places where the big companies find is not it's not important enough for them. It doesn't have enough economic activity for them to put their funds in it. So all activities of this type, are changing the narrative, because there's going to be, in many different fields, alternative for what we've done in the same way for, if not for hundreds of years, like in the case of currency, but in the tens of years for the new technology. Like we've always done, the mobile phone is fairly recent, but we always access the mobile phone to a telephone company. The internet, we always accessed it through, again, providers, which are the same, the Google, the Microsoft of this world control pretty much the internet infrastructure. So if we're going to have a new system, world system based on cryptocurrency, that all of these services need to be offered as well in the blockchain world. And we are right at the beginning of it. And Bitcoin is the first step, which is now, come to attention of everybody. As we're moving into the, what we've been talking about, this, the bull market, which, if we look at what happened in the past 4 years, or when we had the last halving, generally will go on for about 18 months. So we're looking at up to the end of pretty much of 2025. There is going to be some of this repricing going on for something that is now become a lot more well known, easy to access for a lot of people. They are not technologically minded. And that's the gateway. Once the money has crossed into crypto, even with a Bitcoin ETF, it's normal then, if you have, your savings, for example, and you put some of your savings in Bitcoin, and then after a year you compare, okay, how much have I made from this? How much have I made from other things? And then, things will start to, tick. And I think actually that's made me whatever 30, 40, 50, 100%. That's made me free. Okay, what should I do? And so these kind of things are becoming more relevant. All right, so we have 5 minutes for questions. Anybody has prepared any that would like answered? Guys, if you could.
One thing,
Luke.
Yeah.
Oh, sorry.
So,
You go, Jonathan.
I was just going to say one thing that's very exciting to me is we have the Midnight blockchain on Cardano now. It's in testnet at the moment, but that's a full privacy layer for Cardano, and it will translate into a full privacy layer for Bitcoin as well. So you'll actually have your untraceable Bitcoin transactions, same as you would your assets. Like if you've got a savings account, that money can't be traced and tracked. So without insider disclosure. You can have the same thing for Bitcoin, but without any risk of inside disclosure even. So it makes it a really safe asset to hold, to carry out transactions for institutions, for companies. All the rest of it can now be done in Bitcoin. And we know that some big some big corporate customers like Tesla hold vast amounts of Bitcoin. It's very exciting developments.
Yeah, and there are people, because now there are people they are watching the big accounts like Hawks, so in again to noting any movement or where is the money going, and so where is it coming from. So that will then become a lot easier, will make it a lot easier for them to manage the large accounts without oversight, which is a good thing.
Yeah.
Yeah. Catherine, you wanted to ask a question?
Yeah. Can you remind us? So this week was pretty exciting in that Bitcoin almost hit the all-time high again. Like it got really, really close. Can you just remind us the signals or what to watch out for, or what happens when we do hit an all-time high, and also the road ahead? Like, do you see that we're due to hit a new range of highs and lows before the real vertical kind of bull run? That's maybe 5 questions in one. I'll just let you answer whatever you feel like answering.
Yeah, I mean it's so you can have a look at heat maps on different protocols to show you where the stops are. But so basically what happens is that when there is like something like an all-time high, you would have some people, they're kind of like bulls and bears in the market. Okay, so there are some people that will think, well, when we reach the all-time high, it's a good price to sell at. Okay, so there is going to be like selling pressure around the all-time high. Now, what happens if there is enough momentum for price to move significantly beyond that? Then what happens is that obviously you might have a bet the price will go in one direction, but when the price goes against you, you reach a point where, well, you either have to sell or you go bankrupt. Okay, so you get liquidated, and with that liquidation, what happens with those liquidations is that they push the market in the opposite direction. So if you got somebody, they say, okay, they have a strategy, they say sell Bitcoin at 73,000. Whenever it gets to 73,000, sell. The moment that if the price then pushes to 74, 75, they have now position. So they sold Bitcoin and they're losing more money as the price goes up. So they get to a point where they have to sell, or the broker, especially if it's a leverage account, will liquidate their account when it gets to a certain point. So when it liquidates the account of selling pressure, the order, the technical order is that they need to buy back in it because they sold first, so they need to buy back their position. So for the market, it's a buy order. So the price goes even higher, and so that's the thing. What we're saying before when we said all the other relative highs, and I'll just share it in a moment here, just to show you again on the chart. Where are we? All the relative highs that we have seen, like this one and that one and that one, they had already been tested. So a lot of the selling pressure. People are thinking, okay, when it gets to that point, I would sell, etc., has already been exhausted. So they're not as relevant, but the all-time high has still got a little bit of power. So there would be stop losses sitting above here, okay, at around, depending on the kind of strategy that they're using and how far away, what kind of like room for maneuver they want to give themselves. But the moment that we go above the all-time high by at least, I would say $500, so they might be sitting around 75,000. That would trigger liquidation that would push the price up to the new, like similar to this. You see here, whenever we are breaking, then there is a considerable move to another kind of like range where we stay for a while, and then there's look at this, how quickly then price moves up. In this case, that this move, when this is the move after the ETFs were launched, okay, we're going from 40,000 to 74. So that's a 60% in pretty much like a month. Okay, and then we again we sit, and this has been a very long time for Bitcoin after the halving to sit doing nothing. But again, we are now in this sideways range, which is similar to what we've seen before, to something like this, or to something like this. But when we get that move, then it was going to be it's a significant, generally speaking, it's a significant move. Oh, come on. So we're talking about, you see, 46% move, even in this part here. Oh, come on, please. This part here was 35%. If we consider the whole move here, is almost like actually 90%. So you see what I'm saying. Once we break these highs, then we hit the stop losses. Then we get this very vertical moves, pretty much, which are from a market perspective, what we know from the stock market, something like that is just like unparalleled, unheard of. But that's the thing. They can't say, okay, when A happens, B will follow. But obviously, we need to have a break of this. And for me, what's relevant is the close. If you look at the daily candles, for me, what did I tell you last week? So I was waiting for a close above this price to confirm it, because what does that mean? So when you are and you buy, let's say, consider now that a lot of the Bitcoins are bought in the kind of stock market through the ETFs. So there is a trading time for this, and you get to the end of the day, 5 p.m. New York time, when you can't trade this anymore. So closing at a certain level means that on average, the market is happy to hold Bitcoin rather than being worried and selling it at a certain level. So this is why the close are important. So for me, the thing that really we got to watch is that, do we get a daily close above this point? And that would be the first signal that we need to see. So just that we might get something like this, like a price may push through it and then go back in, so all within one day, and it's significant in the sense that there is now, there is enough momentum to break this high and create a new one. But really, what I'm looking at to be confident, and then we're looking at moving to the next price range, is a daily close above this point. Okay, so that's the thing that I'd be watching more than anything else. Hopefully that helps, Catherine. Okay, it's now 8:45. So we'll close this call. Just a housekeeping. I'm away next week, so I'm not going to run a crypto hour, or I'll just have to check first of all if I got internet. Probably I'm not going to run the other hour either. So we'll see you back in 2 weeks time. Okay, so just remember that. And there is talk about changing the times, so I might swap and doing the IAW hour first and then the crypto hour after, because the IAW hour is becoming a little bit too late for people in Australia, New Zealand. Okay, but I need to confirm that, and you'll get through that through IAW notifications, you know, and calendar will be set in the calendar, so you will see that in IAW calendar. Okay, so I will see you again in 2 weeks' time. Until then, have a great weekend. Have a great week. Hopefully, we can look forward to, you know, just do watch the US election, and we'll see what that causes as well in the stock market and in the crypto market, and then we'll be able to discuss it at length in 2 weeks' time. All right, have a great weekend, everyone, and I'll see you for all of you in the coming to the AW session. Again, we'll see you back in about 10 minutes. All right, see you soon, everyone. Bye. Bye-bye.